SoFi is not the only player in the market that offers some innovative ways to do modern banking. Matter of fact, PayPal was the first company that took digital banking to the next level. I mean, Visa, MasterCard, American Express were there, but PayPal redefined what digital banking is. Now, like SoFi, there are few other companies that started with the same goal of becoming one-stop shop. So in this video, I'll break down my research between SoFi, Upstart, and LendingClub and which stock is the better investment for me personally. This is my personal opinion and only meant for entertainment purposes. If you agree, then please comment below, and if you do not, then would love to talk to you that why you do not feel the same way. I always learn a lot from each one of your comments. Okay, so SoFi, Upstart, and LendingClub, they all have same business model, offering digital services and uses AI and data models to fit in user needs and try to keep users on the platform by offering more and more products. Let's compare Q2 results between all three companies side by side so we get a better idea. Now, SoFi right here, I'm going to show from top to bottom. Now, SoFi has the highest revenue out of all three. They did 231.3 million in Q2, but they reported a net loss of about 48 cents right here. Now, Upstart did 194 million in revenue, as you can see over here, but they reported a profit of about 39 cents per share. On the other hand, LendingClub reported 204 million in revenue right here, and of course, a profit of about 0.09 cents per share. Now, out of all three, SoFi is the only one that reported net loss. The other two reported profit per share. Now, let's look at the market valuation of all three companies, and we'll start with SoFi right here. So the first one is SoFi on your screen. So SoFi currently has a market cap of about $12.962 billion, and 1 year price target is estimated about $24.50. Currently, SoFi is trading about $16.40. Now, Upstart has a market cap of about $24.20 billion. 1 year price target for Upstart is about $290.63, and currently it's trading at about $307. Lastly, LendingClub has a market cap of about $3 billion right here, and stock is trading at about $29.62, and 1 year price target is about $26.92. You getting it? Now, if you pay attention, these simple numbers, you can see that SoFi is the only one among these three that is undervalued in terms of share price versus 1 year estimate. The other two are already trading over their 1 year price target, but it's not that simple. Here are few other things that stands out among these right here. So SoFi right here, second quarter results were disappointing to investors as company reported more loss than what analysts were expecting. But 144 million of the company's 165 million loss was due to non-cash and one-time expense. Along with that, SoFi's student loan program suffered a setback due to unexpected extension to the federal moratorium of student loan program. Now, on the other hand, Upstart had a great Q2, generating close to about 40 cents per share and beating expectations right here, as you can see. Along with that, they raised their revenue guidance for the year from 600 million to 750 million. Lastly, LendingClub was a big surprise as they also gave out a surprise profit before the analysts were expecting, and also raised their yearly guidance from 600 million to 750 million in revenue. Now comes the question, which one of the three is the best investment? Everyone has slightly different opinion when evaluating a company, and I look at it this way. The company that offers the most upside potential with the least investment is the true winner for me, as long as I agree with the fundamentals. So let's compare all three neobanks on a few metrics. Let's start with SoFi first. These are all three on your screen and what's going on with each one of them. So SoFi has the most number of product than the other two companies. Second, the bank charter is pending, which will be huge for SoFi as that will give access to cheaper capital for SoFi so they can make more profitable loans. Third, SoFi's naming right to the LA Stadium is a very smart and creative move by the company. Fourth, huge room for growth with current share price almost 30 to 40% undervalued as per market analysis. Now let's take a look at Upstart. Great company, a true disruptor to use AI and make decisions on loan instead of using FICO credit scores. Second, other financial institutions are using Upstart's technology to run their credit program. Third, Upstart went public at the end of 2020 and has seen its share climb more than 700% since first day of trading. I actually saw on the chart it was close to about 11-1200%. That's crazy. Fourth, in 2021 Q2, Upstart had a revenue of about 194 million and a net income of about 37.3 million. In other words, the company is operating at a net profit margin of 19.2%, which is great for a still rapidly growing business. Now let's talk about LendingTree. So number one, LendingTree is the only one of the three neobanks that we are talking about here that already has a bank charter. Number two, they currently have a personal right here, personal and also business and also auto and medical loans and banking services, but they want to expand to other banking services. Number three, they hold more loans in balance sheet instead of selling to investors, in return generating more profit. And number four, relies on AI to make decisions on generating loan, which is what all neobanks will end up doing eventually, so more tech heavy, which is great for digital banking. So now we have looked at all three of these companies and what they have to offer, and this is how I'm investing. While Upstart is playing a very smart game by leveraging AI to connect with other neobanks and using technology to work for them, the stock has seen a major upside of about 700% in a 1 year, which is massive growth. And currently the stock is trading above the analyst expectation for the next 12 months, right here as you can see. But that doesn't mean that they won't surprise Wall Street and trade even higher. But can I see 30 to 50% upside in the next 12 months on my money? I'm not too sure. Next is LendingClub. Actually, this should be C, not we. I made a mistake here. Okay, so this is LendingClub right here. Okay, so LendingClub, it's good and have solid customer base, but it's not exciting to me, and the stock is already trading close to analyst expectation, and catalyst of additional banking product is not strong enough for me that I can see at least 30 to 50% growth in the next 12 months. As you can see right here, it's about $32.17, and stock is already trading close to their 12-month price target. So it's not too exciting. The growth, the upside potential that they're saying over here is about 5.3%, which is not too exciting for me. Now, SoFi, on the other hand, right here, has a few major catalysts in the works and currently is the only neobank of the three that has yet to turn profit, which means the upside growth potential is huge. As you can see, analysts expect up to 50% growth potential right here on this stock in the next 12 months, which is very exciting for an investor. Of course, when you talk about 50% upside, it comes with risk, and the risk could be the bank charter may not happen, but the chances of that are very slim. And also, they could take longer to turn profit because of the student loan situation. But again, the potential is huge. So this is how I'm playing these three. I'm staying away from LendingClub for now until they get me more excited about their offerings. I'll be looking at Upstart for options only, as stock is still sitting on top of moving averages and too expensive to get in my opinion. But it's a beautiful play for options. So in other words, I'll be trading Upstart. And I will be investing in SoFi, as I see huge upside potential for next 12 months where I can get at least 25 to 30% return on my money quickly. Along with that, I will also be trading the heck out of SoFi when we do get the charter news, or 2 to 3 days after the Q3 earnings. Again, I base my decisions on what I see on the chart and also what the company has done historically. It does not always work, but the success rate is higher than the failure, and that is good enough for me. I'll link my trading versus investing video here where I talk about the difference between trading and investing. Do check it out, as that is what I keep in mind when I'm picking my trades. I hope I provided some value, and if you like the video, then consider subscribing and hit the like button so we can reach out to more SoFi lovers. As always, it's so fun to share all of this with you, as I get to learn so much in the process. Love you all. Until next time, you all have a sparkling day.